Stephen, what's your view about the NAB, the decision not to pass on any of the last 25 basis point rate cut? Was that seen in more context? I want to ask you, Stephen, in Melbourne, but it was one of Tony's colleagues on Business Spectator, Stephen Bartholomew's, who wrote that, you know, the better margins in the domestic loan book were largely but not entirely offset by the higher costs of deposit as the intense competition developed among financial institutions. So he's saying, you know, maybe that puts in context more of why they're not passing on the full rate cuts.
Well, I think that's right. ANZ, for instance, is the biggest business in New Zealand of any business, and the economy's in bad recession over there. There was no resources boom for them, and their margins are tight. NAB suffering a big margin squeeze in the UK, in particular, where they've still got a couple of smallish banks, but in a terrible market. So they need to crank up their margins in Australia, the world's most lucrative banking market, where customers suffer from the world's most expensive banking cartel. But because they're losing money, particularly elsewhere in New Zealand and the UK, they need to crank up their margins. And all of a sudden, bad debts for our big four banks are running at $12 billion a year. I mean, we've seen ANZ come out with $1.5 billion for the half. Commonwealth Bank in February come out with $1.6 billion for the half. We've seen the last two efforts from NAB being over $1.6 billion in bad debt write-offs for the half. And we've got Westpac next week, where their last figure was only $500 million. So the big question will be, what will our biggest and strongest bank do in bad debt write-offs next week? If Westpac comes out with $1.5 billion as well, then we have a system that's writing off $12 billion a year in bad debts. Thankfully, the pre-tax profits are closer to $30 billion, so they can handle that sort of level of bad debt write-offs.
Firstly, do you think the Reserve will cut, and will the banks pass any of it on?
Look, I think they probably should wait until after the federal budget on May 12. I think you really need to get a picture of the fiscal policy situation. And then after that, obviously, we're going to need as much stimulus as we can for monetary policy. So if you can get them to zero, then that would be good. But, of course, we're a massive creditor nation. You know, we've got huge foreign debts, you see. So the risk for us is that we might have a currency collapse, and then we have to jack up interest rates just to be able to attract foreign capital, because we've got a huge current account deficit, and we've got federal and state governments borrowing literally $2 billion a week, $2 billion a week every week to fund their excessive spending over their revenues. So I think that it would be great to put interest rates down to zero, but I just don't think the rest of the world is going to lend us money at zero because we've got these huge debts. So I think that you won't see mortgage rates fall much further, and the people most needing a rate cut are the poor old credit card holders, and particularly the small business people who've been seeing their margins go up as the banks attempt to gouge them and hit them with penalty rates. And poor old Oz Minerals has paid more than $50 million in bank penalties and rollover fees. So you just got to stop that sort of gouging and give as much relief as possible to businesses of all sizes.